Hey traders, welcome to our weekly show. I am Raghee and this is my report. Oh gosh. And I need to mute myself. Oh, there we go. Close this. There we go. Great to see everyone. Happy Sunday, everybody. Hope everyone's had a relaxing couple of days. Great to see everyone. All right, so in our show, we usually like to kick things off with a reminder of what we have coming up with the economic calendar. So 3 calendars we need to look at this time of year. Of course, we want to take a look at Forex Factory. This is the first place that I'll typically stop, my first stop. And going into Monday, have some FOMC speak and not a whole heck of a lot else. Consumer credit numbers, nothing that's a major market mover. I mean, especially after last week, we had FOMC and non-farm payroll. But you'd think it's quiet on the economic data front, which it is, but we have this little thing called elections coming up on Tuesday. So major hot zone on Tuesday. I will typically not, I won't say I won't trade into elections. I think the more tricky time around election is not the day of or even the morning of, but rather the evening, which I'm not going to trade the evening, or usually even the close on election day. But the next day can be pretty tricky. So keep an eye on that in terms of what we're going to be dealing with in terms of that. Not so much Tuesday, definitely not Tuesday morning, but going into Wednesday, where we have another pretty quiet day. Things get much more interesting post-election with CPI, of course, any kind of inflation data. Some of you probably remember the kind of reactions we've seen with CPI. Inflation is the most significant macro data that we as traders and investors use to get a good feel of what the Federal Reserve is going to message and possibly do next. So it's going to continue to be a pretty tricky set of numbers to deal with, to trade through. And on Wednesday, we did this with non-farm payroll. So I'm thinking we might go ahead and have another Wednesday morning bonus session where we'll go into the Sector Secrets Mastery Classroom like we did, or chat room, not classroom. I'm still in class mode from Saturday with the volume decoded class. We'll go into the mastery room. And by the way, anyone who took the volume decoded class, basic, pro, and elite, you have either 30 or 90 days, depending on which package you bought, in the Sector Secrets Mastery. So you should have access to this session on Wednesday. So we're going to take a look at that. But that's where things get interesting for us this week. And then we go into Friday. University of Michigan should be pretty interesting. But the big 2 data releases this week, University of Michigan, definitely CPI, and the big event this week, of course, are the elections. So keep in mind, election day, not so tricky, day after, or even that evening. For those of you that tend to think about the Asian session, be careful with that. All right, gang. So as always, best part of our show is your questions. Let's bring up our charts. Here we go. We'll take a look at what's going on with the open. There you go. That tiny little candle. That's an inside candle that we have forming right now. A little bit of bullishness. Why is this bullish? Well, it's bullish because we're higher relative to Friday's close. And I don't mean it's bullish because we're up on, the sum total of 5 minutes of trading that we've seen. But it is movement movement lower from Friday's close, but it is above the open. And so we're not seeing some huge drop. Do we see some buyers remorse? People thinking, oh, why did I rally and buy into Friday? I was concerned we might get some sort of weird snapback. So I'm looking at this as relatively sane action after Friday's rally. But no, it is not above Friday's close, but it is relative to what we could have seen. I think a pretty decent open on Sunday. Not anything that we may see even remotely reflected come the European and UK Open or even the US Open tomorrow at 9:30, and even the early glimpse of what's going on at 7 Eastern. So this is what I'm seeing right now. The only other place I'll make a quick pit stop is where are rates? And I'm probably more interested in where rates are than anything else. So again, a very narrow candle. In this case, we are above the previous session close, which is maybe minorly bullish, very early, but minorly bullish for equities. Way too soon to tell, but just, kind of at first blush, what are we dealing with? All right, so first up, let's see here. Rocky, the futures trade that seems to be setting up is the short indices long treasuries. Well, that's a tricky one, right? Because I would actually have to say it's still short treasuries and maybe long indices. But to your point, there's a weird push-pull there, right? Because if treasuries are moving lower, TLTZB, that means that yields are going higher. Stocks will hate yields going higher. So if treasuries had lower, we would basically expect the equity markets to move lower as well, because they're going to continue to buckle, we would presume, under the higher yields, which they may or may not, but that's what we would presume. So I don't see the long in treasuries quite yet. And I don't see the shorts, but I definitely see what you mean about the push-pull. So I'm not sure yet. Let's get through elections and let's get through the CPI, and then we might have a better idea of what it is we're going to be dealing with once we have those two very important events. One's data, one's a political event behind us. All right, next up, I am Groot. If I have a double green trade flag, double green trade flags, near V-score highs, do I ignore the Trendalorian sell signal? Yes. Oh, no. Wait, if I have double green, well, look, if I have double green, I'm ignoring the V-score highs, right? So there's conflict. Okay, so let's go through piece by piece. Green trade flags, for those of you that don't quite know what this might mean. So green, and what's the symbol? ES daily chart August? Okay, in August. All right, I see what you mean. Okay. So between August, say 9 and August 25, gotcha. V-score highs, do we ignore those in a double green? Well, I can't short the V-score high, right? I cannot short the V-score high in a double green. That's a no. However, and Gru, I don't know if you were in the class or not. I apologize. If you were in the class, then you know that I mentioned that volume can sometimes precede the trend confirming the move. And then I also mentioned if you wanted to get tactically aggressive and consider a more risk-controlled way of taking the short, maybe it's a put, getting long a put, where a directional debit, the worst case risk scenario is whatever you paid for it. I won't ever let a directional debit go to zero. I don't believe in max debit. I think it's just categorically a bad idea. However, the directional debit would give you an opportunity to say, yes, this is super aggro. But if I'm going to put a risk-controlled position on there, maybe an aggro long put. So I will, yes, everything has to obey structure, always. I mean, that's the easiest way to answer that. It has to. So step 3 of my decoding volume, do I use a 1, 2, 3? You could, but remember, but like everything else, market structure comes first. So you were in the class. Okay, sorry, Gru. I have some idea who was in there and who wasn't, so my apologies. When we go into live trading, we do more of our Q&A session, which we have tomorrow at 2:30. Yeah, I'll have a better idea. I'll see all the familiar faces and names. All right, so could we use a 1, 2, 3? Now remember, a 1, 2, 3 can form during the trending environment, but once the 1, 2, 3 completes, it has to be neutral. So it's not that different. It's not that different in terms of when we get an opportunity to take advantage of a reversal. I can't do that when we're still in a trend. So if I'm looking for a downtrend to reverse, and I'm looking at a reversal pattern like a 1, 2, 3, we have to be neutral. I mean, we have to be neutral. So yes, volume can precede the market structure shift. The V score can precede the market structure shift. Even the Trendolorian can precede the market structure shift. But market structure is always something that I will look at first to validate any setup that occurs in whatever structure we have. So hope that makes sense. Hey there, Prince. Have I ever read Trading in the Zone? Yes, I mean, that's a classic. I think a lot of traders in the late 80s and early 90s had a number of books that were dedicated to psychology. And usually it was going to be Mark Douglas, right? I mean, he was way ahead of his time, I think, in terms of addressing the psychology and probability mindset for traders. I will have to say it's not my favorite. Well, no, Trading in the Zone I like far better than The Disciplined Trader. I take that back. So The Disciplined Trader came out first. That was a bit of a dry read, although great information. But I think Trading in the Zone, for me, is his best work. And I think that's a better read than The Disciplined Trader. It's good. It's good. I like it. There's a lot of different psychology books out there that are very good. Trading in the Zone is probably top 5 for me. I also like Market Mind Games by Denise Scholl. I think Ari Kiev has some good trading psychology books. Frankly, I like reading sports books on psychology because most of sports psychology is what trading psychology borrows heavily from, and most gaming psychology, poker, etc., is what trading. So trading psychology is this weird combination of sort of gambling, betting type, probabilistic thinking, and sports psychology. And so I just rather go to the root of it. Annie Duke has got some great work out right now. I'm reading Quit, which is excellent, which reminds me, in 2023, maybe we'll do it around holiday time in December. I am going to have a book club of non-trading books for traders. Non-trading books for traders. Because look, there's plenty of podcasts and shows dedicated to traders talking to other traders, but I think it's far more interesting to read something like Quit by Annie Duke, or to read Outliers by Malcolm Gladwell and ask ourselves, how does that work in our trading? That is going to happen in 2023 for sure. I'll just have to make some time, but we're going to do it. I've also bought the Decoding Volume class. Very cool, Prince. I appreciate that. That's awesome. And I've been watching it today, having a blast. Thank you, my friend. I'm glad it's helping. It's probably one of my most straightforward classes ever. We dove into a particular tool. Big idea was, how do we move the needle with volume? And I got right into the setup, that 3-part setup. So I'm looking forward to seeing. Remember my class, folks, tomorrow at 2:30, we're going to head right back on into the classroom because we have a follow-up to the class, a 90-minute follow-up to the class. So rather than the class being over Saturday and that's it until live trading, we have the follow-up to the class tomorrow at 2:30 Eastern. So I'm really looking forward to that. It'll be a great time for all of us to come back to review the material together after having the weekend to listen and digest, including myself, right? Go back and say, okay, what could I have done a little bit better? What do I need to dive into a little bit more? What do I need to emphasize a little bit more? So looking forward to it. I appreciate it. Practice says, not liking the time change at all. Practice, I was just thinking that I'm looking outside my office window and it is so dark. Yeah, and it's only 6:15. But it was nice this morning when the sun was up. But I'm with you. All this time shifting, not liking it. Not liking it. Red Wolf says, audio, video, good there. Oh, you're tuning in from my personal channel. I don't do a lot on it, and I will dedicate more time to it come 2023. When we do the non-trading books for traders show, it will be on my personal channel for sure. Yeah, I'm right. I didn't realize that. Yeah, very close to 10,000 subscribers. Very cool. I haven't spent a lot of time on this. Clearly, it just has the generic layout. But yeah, I think in 2023, I'm going to rededicate some time to YouTube. I love YouTube. I know people want to get into Insta and they want to do podcasts, but I'll tell you what, I love YouTube. I spend a lot of time on it personally. I learn a lot of stuff from it. I like YouTube a lot. Yeah, I like YouTube a lot. All right. I appreciate that. Thank you so much. All right. Next up, Good evening. Good evening, SK. Okay, please let me know my thoughts on XLE. All right, for long puts. Oh gosh, no long puts. So SK, let me grab my drawing tools here. No can do. Can't go for that. Let me show you why. Where's my drawing tools? When you look at the daily chart of the SPDR, the first thing you'll notice is it's, as we call, double green or green over green. Now, what does that even mean, green over green? What that means is that we have a bullish momentum environment and a bullish trend. And within that structure, market structure, this is an uptrend. I cannot get short an uptrend. That would be essentially picking a top. That would be picking a top in the uptrend. So can't do that. How about long calls? How about selling puts? So if we move lower, let's say into the 21 exponential, if we move lower, let's say into the +1 standard deviation of the V-score, I can get long calls. I can also sell puts. You can get into a spread. So there's a lot of things we can do, but we're going to need the pullback. But I cannot get long puts, my friend. No short strategies on XLE because the structure is bullish. We are getting kind of toppy, though. XLE is getting a little bit toppy as we get up towards the upper end of the V-score. Yeah, we are getting a little bit toppy there. All right, let's see. Dow, sure. Oh, let's do this. YM. Neutral market on the daily. Bullish momentum. This is not the final resistance. Our main resistance is going to be somewhere between the mean and the +1 standard deviation. That's a volume-derived resistance level. We are battling right now at two very important resistance levels. One is the VWAP, and the other is the 200. And in this zone, we have, well, better to put an R there for resistance. Since we don't have a trend, we can view this as overbought. We can view this as overbought. But remember, gang, we do have elections coming up. And while I don't trade, nor do I consider politics a part of trading, it is a part of volatility. Here's what I will say. If someone is betting on, and I hate even going down this path because I detest politics as they apply to trading. And the reason for that is it's discounting news like anything else, but it's a far more, look, there's a lot more emotion tied up into, politics than how the CPI comes out. And yet the way that we should treat them is the same. It's just data. Just as we position ourselves in front of a release like non-farm payroll, just as we position ourselves in front of an event like FOMC statements, traders will and investors will position themselves in front of an event like who's going to win the House, those kinds of things. And based on that, based on those platforms, based on those expectations, they'll say, well, this sector should do better, this sector. But remember, just like discounting any data event, if we're wrong, that trade has to be essentially undiscounted. It has to be unwound. And so I would prefer not to place trades in front of that kind of event. It's not specific to the election. Any hot zone like that. And I'd rather see how the dust settles. I'd rather see the reaction say, again, it's going to be mostly day after. I'd rather see the day after reaction, and then I'll position myself. I know a lot of traders want to be positioned for the news, but it's a very binary and tricky and difficult to manage position. So it might make sense, Mr. Walker, for us to wait. And Dave, my answer to Mr. Walker is the same as kind of your question there, which is it doesn't matter, frankly, and I mean this sincerely to myself. It doesn't matter what I think. It only matters what I see. It doesn't matter what I think. It only matters the reaction in the market. And I'd rather be, well, a counterpuncher, right? Like him or not, Floyd Mayweather, legendary boxer, probably one of the best counterpunchers ever. I'd rather be a counterpuncher. I'd rather say, let's see what the market's going to present to me. Let's see where price goes. Let's see what kind of volume is there with that price. And then I'll decide if I can control risk from that level. Because the problem is, can I control risk in front of any of these events? And it's notoriously difficult, frankly, and that's where I have to ask myself, is it worth it? And for me, most of the time, that answer is no. Thank you for the question, both of you. I appreciate it. All right, next up. Hey, Raghee, do I look at any other confirmation while taking a trade in the S&P 500? Like advanced decline ratio, global Qs? No. So advanced declines, that's in market internals. I do not use market internals. No. The only thing that I use that would be kind of considered an internal, but it's really a futures contract as well, is the VIX. I don't use put call ratios. I don't use tick trend. I don't use advanced decline. I don't use any of that stuff. No. And you might say, gosh, Rog, I mean, so many of your contemporaries do, and that's fine. I'm not saying they're no good. I'm just saying I don't use them. As I like to say, I like to put mustard on my fries too. Not for everybody. What I will say is that the reason that I do not is because the way in which those market internals are weighted does not reflect the weighting of the indices. So unless I have those market internals that are weighted in the way that the high concentration weighting of the indices would reflect that Apple should be weighted stronger than most other stocks. When you look at the Dow 30, it's high concentration weighted. When you look at the S&P 500, it's high concentration weighted. Look at the NASDAQ 100. What does that mean, high concentration weighted? That means that not every stock has equal weighting and equal influence. That means that there's a small group of stocks that have a disproportionate influence on where that index is going to go. So until we have weighted market internals, and I'm sure they exist, I'm sure someone's done it, I just haven't, it's not really of interest to me because it's not really reflecting what the market is doing or why the market's doing what it's doing. So I hope that makes sense. All right. And yeah, just a reminder for those of you that mentioned, those who are wondering, what is this class you're talking about? So Saturday, I did a class from 4-hour class from the perspective of how is volume helping me trade 2022. You can still catch the class on replay. You can still catch the live class follow-up tomorrow from 2:30 to 4. And you can still catch anywhere from 2 to 4 days of live trading with me going into November, and even our longer-term portfolio bonus going into December, depending on which package you're interested in. You still can check that out. Looking forward to seeing everybody there tomorrow. All right, next up, TLT on the weekly. Oh, cool, a weekly chart question. Love it. I'm still going to look at ZB first, Kathy, and then we could definitely switch on over to TLT. Do we have an inside candle? Rather, inside candle or a completion of the minor low? Kathy, it kind of doesn't matter because we're in a downtrend, right? The trend overrides everything. So this is actually both. It's an inside candle, but it could be the beginning of a minor low as long as we don't take out the low of the week of October 24 candle, which is 91.85. Remember that an inside day within the minor low is fine. We would just kind of ignore it and wait for the next candle to either break the lower low high or invalidate the pattern because nothing happens. So that's true. The candle pattern is there, but the structure makes it a no-go. So I really can't do much with it other than look to short the rips on that downtrend. So Kathy, thank you for the question. When we begin a new year, how long do I wait to re-anchor the V-score and VWAP? I'll wait a few weeks. I'm not in any rush. Yeah, I'll usually wait a few weeks. Let's see. If I had a join button on my personal channel, I would definitely a join button. What does that mean? Sorry, I'm completely out of the loop on some of these. It's not just a subscribe channel or subscribe to the channel. Well, I'll look into that, Prince. I don't know what that means yet, but I will. I'm going to rededicate myself to some time on YouTube. Thank you for the vote of confidence. I appreciate that, Prince. Hey there, Trado Momo. How are you? Went to the class again today. Awesome. I can do Kung Fu. I love it. I love it. Yeah, I talked about the scene where Neo is jacked into the Matrix and he's learning all the different martial arts, and he comes out of it. He looks at Morpheus and he says, I can do Kung Fu. And Morpheus says, show me. Right? Yeah, I love it. I love it. Oh, a paid subscription? Oh, I'm not going to charge for that, Prince. No, I appreciate that. No. My YouTube will be gratis. No, I won't charge for my YouTube. Oh, I didn't even know you could do that. Nor would I. I just want to give you all information that I hope is helpful. Yeah. Yeah. On YouTube. Yeah. Well, I just hopefully give you some good information to use. Now, I appreciate that, though. FCX. Too soon to tell. Carlo, I would be very careful. Not yet. Yep. Too soon to tell. And anytime you have a gap, be careful. Be careful in that regard. But something is, probably more interesting about that, Carlo, is the fact that price is over the 200. Looks like it's making a run for the first of the year anchored VWAP. Look at the mean. The mean was resistance back in June 7. Look where we're heading. So if anything, we could be looking at a transition to an uptrend and maybe an opportunity to get long, to start switching to more bullish hemisphere thinking. So that could definitely be something that's setting up, but we need to watch a few more candles, right? All right. Next up. Hey there, Shepard. What best practices do I do to make sure I have the right mindset? I've been trading to set for 7 or 8 years. Oh, very cool. And so far this year has felt like I just started all over again. You're not alone. So first of all, you're not alone at all. And as far as the mindset, it's interesting. I was just watching, just before we started this, I love jiu-jitsu. I'm a huge John Danaher fan. He really is. And for anyone who follows jiu-jitsu, say, watched ADCC a few weeks back, month ago, I guess now, he's been, Gordon Ryan's coach. And anyways, he's a very, very, very established and respected jiu-jitsu coach. Grappling, for those of you that don't know. And he was just saying that the mindset, confidence comes from the physical skills. And I was thinking to myself just before we came on, we always want to journal and have all these mental exercises and picture our future selves and, live in the gain and not the gap and all these things, right? But confidence, the confidence and killing doubt comes from a certain degree of skill, and skill usually comes from some action. So what are the actions that we as traders can deploy to help us right the ship? I mean, reading to me is definitely an action. It's going to map to mindset. Sometimes reading about traders who are doing well just gives us a different paradigm, a different possibility, and has our brain looking at, that reticular activating system, right? You buy a car and you never saw it anywhere in your town, and you buy that car and all of a sudden it's everywhere. Now your brain knows to look for that car. What if we trained ourselves to look for success? What if we trained ourselves to look for people who are being productive and profitable, etc.? So that to me is and I don't have the whole answer, but what are the actions and the skills what are the actions I need to take to develop the skills that give me the confidence? And maybe it's reading, maybe it's going back and like, for example, in TradingView, you can go into replay mode. You can replay days and days and days and decades of data, candle by candle by candle, and like a DVR, right? I would have said a VCR 20 years ago, but like a DVR, you're able to, or DVD player, right? That's such ancient technology now, right? You can play the candle. So even price action that you weren't even privy to, or even witnessing, you can replay and say, okay, what are my indicators doing? What do I see? And that's how I shortcut. When I was a brand new trader, there was a lot of software. It was pricey, but you could buy software and download 20 years of data and replay it. and just sort of almost like a quarterback watches film. It is Sunday, right? Almost like a quarterback watches film. Just watch it. And those are things maybe that can help, right? And then I'll tell you what I've been telling traders for the last 2 weeks. Find one thing. Find one setup, find something in your arsenal, one thing that you can use as an anchor, and based on that, you can start to build a very simple, clear approach to sort of help you build your confidence back. One thing I see in myself, the longer I trade, is I do less. I really do less. I have fewer setups now than I did 10 or 15 years ago. I'm looking at fewer things. I'm looking at fewer symbols than I did 10 or 15 years ago. And I imagine it's going to continue to get more and more focused the longer that I trade. As I go from my third decade into my fourth decade, I can only imagine how much less I'm going to be doing. I'm still trading quite actively. In fact, my activity is probably as active as it's been. But I am looking for fewer things that are going to pull me into a trade. So maybe, not minimalism, because I'm not a fan of that per se, but essentialism. What is essential? What is absolutely essential? When you look at the 80-20 rule, what is that 20%? What's the needle mover? That's how I came up with volume for this class. What's that 20% that's really moving the needle? And do you have the discipline to ignore the 80? That's something to think about, right? That's something to think about. All right, gang. As always, thank you for being here for our weekly report. Again, my game plan for this week, because of election and CPI, is very much to probably still remain quite nimble. Trade the first hour or so after the bell, 9:30 to 10:35. Heads up for Tuesday. Not so much Tuesday being the problem, but Wednesday. I think I would treat Wednesday as a caution day. And then Thursday, gang, we have the CPI. And if you've watched the last couple of months of CPIs, this one can be a massive market mover, because this is either going to confirm that we can get closer to a Fed pivot, or this is going to confirm that the Federal Reserve should be still looking at a 5 to 5.25, or even 5.25 to 5.5% target rate peak, or what they call that terminal rate. So that could be a huge, huge one. That's going to be on Thursday. All right, gang. As always, I'll see you tomorrow for Charts and Coffee at 9 a.m. Thanks as always for being a part of the Raghee Report crew. And I will see you all. I'll see you all tomorrow. Be good to each other.